Small and mid-cap stocks are broadly defined as stocks with a market capitalization greater than 100 million Singapore dollars and less than 1 billion Singapore dollars. According to data from the Singapore Exchange, there are more than 160 of such companies listed on SGX, and they generated a median 7% total return in 2019. Their combined daily trading turnover averaged $55 million per day in 2019. Experts say the performance was in line with a general modest recovery for stock markets due to the easing of trade tensions between the US and China.
The uplift in global demand due to the reduction of trade uncertainty will most definitely benefit Singapore's trade-exposed economy, and because of that, we expect the business sentiments to improve and therefore rising business activity. So what this means is that we are likely to see greater job creation, possible support for wage growth as well as expansion. And all this coupled by the fact that we believe that consumer confidence might rise, and all in all we'll get improving domestic demand, which is really beneficial for small and mid-caps companies.
In particular, the tech sector saw some recovery after being battered for the last several months, and this has led to some optimism for the many small and mid-cap companies in this space.
We continue to see the theme on the tech side, earnings reporting coming through, guidances so far, I think since last year, have been fairly supportive as well, carrying on the theme that perhaps the worst is over, demand coming back. We did see, say, in the chip space, semiconductor space, equipment sales picking up. Demand globally seems to have bottomed off and become less bad.
Then you started to see stocks in the semicon space like your AEM, UMS, and Franken started to perform really very well. I think they rallied quite close to 50 to 100% in 1 month, right? And then you start to see other stocks start to pick up. Risk-on investors are getting more risk-on. And I think in the fourth quarter, that's when you started to see action coming back to the market.
Analysts say that trade uncertainties have by no means ended, despite the signing of the Phase 1 trade deal between the US and China. And with the spectre of re-emerging hostilities in the Middle East and other geopolitical risks in 2020, small and mid-cap stocks may have an advantage.
The small mid-cap companies, they are able to, I would say, adapt to market conditions more rapidly, and they are more nimble. When you join a large organization, things tend to get a bit inflexible because you just become part of a system, right? So it's the same as these stocks. These companies are small. They can change their strategy very fast. Because of the flexibility, they do have an edge over their larger peers, despite their larger peers having a bigger size than them. And that's how these small and big companies can actually grow.
Analysts also say that small and mid-cap stocks offer opportunities for investors to find the next big thing.
Small and mid-caps are lesser covered by the analysts, and therefore we believe that there are more price inefficiency for those sectors, and hence we would likely to find more undervalued stock with huge growth opportunities that they are still being undervalued because of this pricing inefficiency. So from a bottom-up stock picking perspective, we can find great rewards for this kind of companies, provided that the fundamentals remain sound.
But as with all investments, stock picking is essential, as well as doing your research. Analysts recommend looking for companies with good growth and strong fundamentals, on top of a net cash balance sheet to buffer against any external impacts.
So you do really need to do your homework and also look into stocks that you think are better than the rest. And why are they better? How is their balance sheet? How's their cash flow? How's the management, and what are their plans? So if you're able to pick a good stock from another, that would also help your returns. So for example, in the property space, there's many small mid-cap property counters. And why one would do better than another would be, a good reason to why to do stock picking.
In addition to the tech sector, analysts are optimistic on mid-cap firms in the construction sector, which is more dependent on the domestic economy.
We have seen a lot more interest in construction stock, property play, although the challenge still remains in this kind of very competitive environment. It's still about margins, can they deliver, or whether there may be shortages of resources, materials, which may drive up prices, etc. But we'll see how things pan out. So at least a bit more variety this year for sort of investors to look at in the small, medium cap space for Singapore.
We believe that the small and mid caps can potentially return larger than a large cap when the domestic economy rises. Many of these companies have huge growth potential. And if you look at corporate earnings, we can see that earnings for this small and mid cap sector have actually been larger than the large cap sector for in the past few years.